Alrighty. Good morning, everybody. Well, I guess I should say good afternoon now. Thank y'all so much for joining us today. We are really excited to get into a very specific and I would say niche form of real estate investing. Today, we're going to be talking about mobile home parks. And we've got Andrew Keel with us, who has been on our platform numerous times before this and really has a wealth of knowledge in this subject specifically. So while we are getting started and still waiting for some folks to join on, we want to try to make this as interactive as possible. So why don't y'all go ahead, share in the chat and in the comments where y'all are joining from us today. I know we, Quest is based in Texas. If y'all are not very familiar with us, our corporate office is in Houston, but we service investors and clients across the country, and even have some investors who make alternative investments internationally as well. So certainly not limited in our, scope of work, but let us know where y'all are joining us from today. We have, people who are in the Texas area and always have some folks that are, across the country as well. So one other thing, I do just want to give a brief disclaimer before we get into this. So if y'all are familiar with Quest and our presentations and webinars, you've probably heard this plenty of times before. But we cannot provide any sort of tax, legal, investment, or deal structuring advice. So please bear that in mind as we bring on Andrew and he goes through his presentation and even answering questions and things like that afterwards. This is purely for educational purposes, but we do certainly want to give you as much information as we can. So put your questions in the chat. We will have probably 15 minutes or so for Q&A at the end. So we'll get to all of your questions. I love seeing everybody interacting already. Houston, Colleyville, a lot of people in Texas, somebody from Columbus, Ohio. That's fantastic. Okay. So before we bring Andrew up, I just want to share, a brief introduction and some information about him. So Andrew Keel is the CEO of Keel Team LLC, which is actually an MHU Top 100 owner and manufacturer at housing communities. He's got over 2,000 lots under management. His team currently manages over 30 manufactured housing communities and 10 self-storage facilities across over 10 states. So he's certainly got a ton of experience in this space. Andrew's current commercial real estate portfolio totals almost 100 million in assets under management. So his expertise is in turning around managed manufactured housing communities and self-storage facilities by utilizing proven systems to maximize the occupancy while reducing operating costs. So he also specializes in bringing in homes to fill vacant lots, implementing self-storage revenue management, starting utility bill-back programs, and improving overall management and operating efficiencies. So without further ado, I am going to remove that from the screen and let's go ahead and bring up Andrew. Everybody, I know we can't hear you, but go ahead and give Andrew a welcome. Super excited to have you on and really appreciate you devoting the time to kind of speak to our audience as well and give some of your, share some of your expertise on mobile home park investing.
Yeah, thank you so much for having me again, Colin. I'm excited to be here.
Absolutely. Well, I will go ahead and get it out of your hair and let you get to business.
Awesome. Yeah. Thanks again, Colin. Thanks everybody for attending. We're going to go over the pros and cons of mobile home park investing because mobile home parks have increased in popularity over the last couple of years. And, I think it's just really important as we look at all of our investment options to consider not only the pros, right? Because there's lots of content on that, but also the cons, because there are some big ones in mobile home park investing. And as long as you're aware of them, you can account for that risk. So let's go ahead and dive in here. So 3 major takeaways that I hope you'll be able to walk away from after this class. One is, obviously the benefits of mobile home park investing. 2 is the major risks to consider. 3, how to add value to a mobile home park and what that looks like. And then number 4, how to get started in mobile home park investing. So look at that. There's 4 instead of 3 major takeaways. A little about me. Colin gave me a great introduction. We do own over 2,500 lots now across 40 mobile home parks. We have 3 closing before the end of the year. Worked out to take advantage of the bonus depreciation in 2023. I also own a mobile home transport and installation business based out of St. Louis. And I think one thing that makes us different than other operators is we're very hands-on. Someone from my team moves on location right after we purchase a mobile home community. I have a podcast called the Passive Mobile Home Park Investing Podcast, geared towards educating investors on exactly this topic, the pros and the cons, and what to look out for when you're going to be a passive investor. Side note, I love doing the Ironman 70.3 competitions. That's a hobby of mine. But yeah, let's go ahead and dive in and get into the juicy stuff. So here's some of the pros. It can withstand different economic environments. It's been said to be recession resistant, and we're not just pulling that out of a hat. That's been proven. If you look back in previous recessionary times, mobile home parks have performed really well. Where they're not dropping, the income's not dropping drastically during a recession, where other asset class, that is the case. Shrinking supply and growing demand. I think that's a really big one we're going to touch on. Opportunity for consistent cash flow. It's rental income, right? Multiple income streams, lower maintenance costs, tax benefits, consistent tenant base, shared responsibilities, flexible financing options, and lower competition. So, it's been a wild ride the last couple of years. The Fed seems at this point to think that they've pulled off the soft landing, which, hey, I hope they have. But there's still some skeptics out there that think, hey, a recession is still coming. That yield curve did invert, a while back. Who knows? But the Fed has hinted at dropping rates into next year, so that could be a good sign. But for a while there, it wasn't looking, as rosy as it is today. Inflation, has been a pest, right? It hasn't gone away right away, but it has, been on a downward trend. But things like general things that we were buying, not just luxury goods, but everyday goods like bread and butter and eggs, were last year at really high rates of inflation. So having investments that can weather this inflation storm is pretty important. So number one, mobile home parks are non-correlated. And what we mean by that is it's not directly correlated. The success of a mobile home park investment doesn't depend on the stock market, right? And the traditional markets. So that, can help it withstand many different economic environments, from inflation to unemployment to obviously different levels of GDP growth and things like that. It's affordable housing, and that yields. There's a strong demand for that. So that's one of the big benefits of mobile home park investing. To go on the other side of that, the devil's advocate to that is, hey, it's affordable housing, right? It's going to be a little bit harder to manage, and I think that's where, when I look at and I hear about deals that went bad from a mobile home park investing standpoint, it was from poor management or just no management at all. And that's important to note that it is affordable housing, right? I saw a post on LinkedIn the other day. It said, when it comes to affordable housing, the higher the cap rate, the higher the headache, right? Because you're buying stuff that is more management intensive. But if you have good systems in place and you have a good operation, some of that can be systematized and can be it can be hedged, right? You can manage around it. Demand for affordable housing is unprecedented. I mean, I think that's everybody on this webinar would probably agree that that's a common thing, right? It's not an easy problem to solve. I'm not sure if there's any podcast listeners, on the webinar today, but there's a really good podcast that just came out on Freakonomics Radio, which is a great podcast, and it talked about how construction, productivity hasn't kept up. Like it said something about the value of a single construction worker today is 40% of what it was back in 1970, just because we haven't increased in productivity uh, you know through the last 50 years. So recession resistance of a mobile home park is obviously due to that affordable housing. Everybody needs it, whether we're in a recession or not. It's that most affordable form of non-subsidized housing, and that yields, if people are downsizing, right, well, this is that bottom tier of where they're downsizing too. So that's important to note. I think this is a big one too that a lot of people don't immediately recognize, but mobile home park residents tend to stay put longer. There's a high retention rate where the annual turnover is closer to 5%, on a tenant-owned home compared to 45% on a rental unit. Whether that's an apartment or a mobile home park, mobile home tenant that's like renting the home from the owner. Our model, and I think most mobile home park investors, they prefer tenant-owned homes, and we're going to get into that, in a couple slides here in a minute. But that's a really important piece here, is that that income month after month and not having such high turnover rates. And mobile home parks usually operate with higher profit margins. We're going to go over a sample slide here on that, but the expense ratios are typically around 30 to 35%, of 30 to 35% of the gross profit, the gross revenues goes towards expenses, insurance, taxes, etc. So they can operate with profit margins that are higher than other asset classes. In mobile home parks, because of the stigma, they can be acquired for higher cap rates. We're looking at a deal right now. It's a 10 cap going in, and you're just not finding that in other asset classes. This is a big one, shrinking supply and growing demand. If you just Google, mobile home park, supply, or mobile home parks closing down, there's a lot of mobile home parks because of their zoning, multifamily zoning, that are being, they're moving out all the homes. They're giving people notice, and then they are, converting the land into multifamily apartments. So it's very common for a mobile home park to be scrapped and that zoning to build, in dense areas, build new apartment complexes. It's a higher and better use for the land. So that's an important item here that we're going to keep revisiting, is that shrinking supply, where the demand of affordable housing is continually growing year after year. Most homeowners are looking for affordable housing. Income levels are not increasing at the rate that rents and housing costs are increasing. Here's a couple of stats. Home prices went up almost 21% from March 21 to March 22. Rents jumped 12% in the same period. In 2020, 30% of all households had unaffordable rent or mortgage payments, exceeding 30% of the household income. Again, affordable housing is in high demand. I think we all can agree on that point. We talked about this, low maintenance costs. If the tenants own their homes, their retention rates are high in well-managed communities, and that's going to yield, consistent positive cash flow if managed correctly. We talked about the turnover rates. Another big piece here is the cost to relocate a mobile home. A lot of people don't realize that just to move a mobile home, you have to disconnect all the utilities. You have to put on the axles, put on the wheels, get the hitch ready, and it's very expensive then just to move that home, a couple blocks down the street and then rehook it up is likely going to cost over $5,000. So very expensive. Block level, tie down, all of that, anchoring it is expensive. So it's not as mobile, as the name might lead you to believe. Multiple income streams. beyond lot rents, right? So the ideal model is renting out the dirt, and people are, that own their homes are just paying, lot rent. But there's other things like in nicer communities, we've installed carports and charged an extra monthly rate for that. We've installed new sheds on every lot, that are, these better quality, and it helps, keep the park looking clean when everybody has a shed that they're able to put stuff in. Uh, there's a equation I'll show you of like the value of a dollar in a 6 cap property is so substantial. So anyway, when we're walking around our parks, which I visit, every quarter, when we're walking around our parks, we are looking of how can we add an extra dollar of income to this property. Is there extra space where we can add RV rentals or boat parking? RV parking and boat parking on top of that. Any way that we can generate more income out of these properties, we are looking to do that. And in some communities, we've been able to get creative and add tremendous amounts of value to the assets themselves. Here's a little bit about mobile home park value add. A lot of people are familiar with like apartments and how to add value there. But in mobile home park investing, there's a lot of different ways to add value and increase that income, right? All commercial real estate is valued off of the income it's creating. That's the cap rate. Another important part of mobile home park investing and why it's a good investment is the rents. The lot rents are historically low. There was a study done by a Duke professor stating that lot rents just have not been increased with inflation, since the 1950s. And a lot of these a lot of mobile home parks, like 70% of them are owned by mom and pop owners that only own one mobile home park. So, they, in an attempt to not create occupancy headaches, they're leaving lot rents low, just, because they're using these as, retirement vehicles. So rents haven't kept up with inflation. There's a lot of room to go up on those. We're buying communities, billing back water and sewer. A lot of times the mom and pop owners are including that in the rents, which, I don't know about you and me, but in a subdivision, everybody is expected to pay their water, sewer, and trash. So it's not out of the norm for us to be able to add value and decrease our expenses by billing back, for those services. We talked about adding storage sheds, cable internet contracts, where we can get our tenants a discounted rate if everybody uses the same providers. And here's a couple other options on here as well of how to add value. We talked about the low maintenance costs, right? Tenant-owned homes, it's a shared responsibility. Basically, when the tenants own their homes, repairs and maintenance are on park infrastructure, right? The utility infrastructure, the street lights. It's not on replacing appliances or, fixing, items inside of the mobile homes themselves. So that can yield a higher cash flow because the expense ratio is, again, around 35%. So here's a quick example of looking at the numbers. If you have 500,000 a year in gross rental incomes coming in, 35% of that, 175K, would go towards property taxes, insurance, management, and et cetera. So your profits would be higher compared to like an apartment complex that might have a 55% expense ratio, because there's so much more involved, and you're responsible for all of the the contents in the apartment units. Tax benefits, a penny saved is a penny earned, right? So mobile home parks have, I think I read an article the other day that mobile home parks, RV parks, and golf courses are like the 3 top commercial real estate asset classes for tax benefits from a depreciation standpoint, because the majority of the price you're paying is for land improvements, right? You're getting raw land that has land improvements of utility infrastructure, roads, off-street parking, et cetera. And, you're able to depreciate those on a faster schedule compared to, other commercial buildings that may be, depreciated over, 25 or 35 years. So that's a big point there. I know that the bonus depreciation is being phased out. It's 80%, for properties that close in 2023. and then next year it goes down to 60%, and then 40. But who knows what the future tax laws will provide. Obviously, we're going into an election year, so we'll see what happens. Consistent tenant base. Again, affordability is important. We're at the lower end of the housing scale when people are downsizing, and then cost to relocate are very high. Shared responsibility. Again, when the park owners are just responsible for the land and infrastructure, the tenants are responsible for their homes, and they're going to take better care of them because it's a very affordable way to live. It's a joint stakeholder standpoint. So again, it can be a win-win when they're maintaining their homes because they're owners, and then the park is responsible for just the common areas and the infrastructure, utility infrastructure. So financing has been more readily available as mobile home park investing has become more popular. There's some big, government-sponsored lenders. Fannie Mae and Freddie Mac are like two of the biggest lenders in the space, and they create a win-win because Freddie and Fannie, when we do a refinance on a community, if we've treated the property poorly and we've just sucked every penny out of it and we haven't reinvested into the infrastructure and into the maintenance of the property, they're not going to lend us the money. And they offer the best in asset class financing. Absolutely, the best financing available is through Fannie and Freddie. So they're only going to lend on properties that meet their criterias, and there's even tenant protections in those loan covenant documents that protect the tenants so that we are not, mistreating the property and not keeping up with maintenance and things like that. So it's a win-win, situation where the investors get a good return because they get the best-in-class financing. But yeah, you're going to have to invest money into the property to meet the criterias that they want. Some of those are like, well-lit common areas, removing the hitches, having off-street parking available at every lot. And there's some additional requirements, like they send an engineer out to inspect the property, and if your speed bumps aren't painted yellow or your sidewalks have big cracks in them and are upheaving because there's roots underneath of them or something, they'll hold back money at the refinance, and you have to get those items fixed within a certain time frame to get those proceeds released to you. So it creates a win-win for the tenants because they get a better community to live in. And then the investors, because they're getting that good financing. Lower competition, this has changed over the last couple of years. But if you look at the total number of mobile home parks in the country, there's like around 44,000 or so. Literally 70% are owned by mom and pops that only own one or two parks. So the top owners like Equity Lifestyles, Sun Communities, Yes Communities, they only own, such a small fraction of the total parks. I think it's less than 10% of the total mobile home parks in the country, that there's still, not a lot of competition in the space as these baby boomers retire and start selling these assets off. There's a lot of opportunity there. I will say there are some big names, that have gotten into mobile home park investing and buying portfolios. Blackstone, Apollo, Carlyle. A lot of the big private equity groups, are deploying capital to the asset class, and they're deploying capital on a lot of different asset classes, and build for rent and other things as well. So this is a recap of the benefits. Again, there might be additional benefits as well, but I'm sure if you've looked even slightly into mobile home park investing, you can see the upside. I think one of the biggest, risks though is that operational risk. So let's go through some of the cons, some of the risks to consider. Buying in a market that loses a large employer, right? I mean, that goes for really any real estate. Because obviously, if you lose a large employer, you're going to lose, population. People need reliable employment to be able to pay their rent. Older utility infrastructures is another big risk. And a lot of people, like first-time mobile home park investors, they rush into a deal. They don't really know much about utility infrastructure and the age of the water lines and sewer lines and issues that have been had previously. And the utility infrastructure is such an expensive land improvement that you can get into some trouble. So I might be getting ahead of myself. We'll just kind of go through the bullet points, and then I think there's a slide on each of these where we'll go into the details. But property management is going to be key. Working with a property management company, either internally or with a third party that can't handle, mobile home park management is so different than, traditional residential real estate. So this is really, really important that you work with an operator that knows what they're doing. One of the big things is this bad weather, tornado risk. We're going to go over that. A lot of people worry that, you see on the news whenever a hurricane comes through, you see these older mobile home communities down in the Florida Keys that are all tore up and the homes are moved off. And those are all typically pre-HUD homes, that are like built, before 1980 and, don't have some of the new technology like the tie downs and the anchors that actually allow manufactured homes to withstand, over 100-mile-an-hour wind. Utility systems that are private, knowing the risks of a well water, septic, lagoon, wastewater treatment plants, park-owned homes. This is a big one. That's a big risk. We'll talk about the age of the homes. That's a big risk. If you get a lot of older homes that are pre-HUD, the stigma is a risk, and if you're working, if you have a community that has a bad reputation, that will come back to hurt you. And then there's some regulation risks that we need to consider. So obviously losing a big employer would be an issue. By the way, I will say I see some questions coming in. I will answer those at the end. I'll try to give everybody a chance to get their questions answered at the very end. So thanks for just sending those along, and I'll make sure to answer those at the end. But yeah, losing a large employer, you want to invest in a market, and the way you solve this is by doing proper due diligence, right? Just because a deal is a 10 cap doesn't mean that it's a no-brainer if you're buying in a very rural area that doesn't have diverse employment. Older utilities and infrastructure, we talked about this. Most parks were built. There was favorable government financing back in the 50s and 60s, and that's when most parks were built. Well, they have, outdated materials, like there was a community that we did some due diligence on, and it had Orangeburg sewer lines. And if you ever get bored and you want to see some really disgusting pictures, go on Google, type in Orangeburg sewer lines. The stuff is basically paper mache that they were building, they were building communities out of, and it has just disintegrated. So their sewer lines have disintegrated, and it can be very costly, and you have a lot of backups. So you just want to make sure that you know what you're getting into, right? If you're going to go into a community like that, which this one we ended up, we asked for a large price reduction because we were going to have to replace all the sewer lines, and we just killed the deal because it didn't work. The seller wouldn't work with us. But due diligence is key to understanding the utility infrastructure, what the water lines are made out of, talking to the tenants, asking, hey, how do you have water leaks constantly? Is the water consistently shut off? Do you have backups on a consistent basis? All of that can be, somewhat mitigated before closing. And a lot of newer investors, like I go to, there's an MHU boot camp, Frank and Dave boot camp. I've been 4 times, and it's like it's definitely the industry's like top event for learning about mobile home park investing and how to do it. And I was at one of those events, and someone bought a mobile home park and then went to the event, and they went to the event to like learn about how to manage mobile home parks because he was getting fined by the EPA because his septic system was leaking, and he didn't know to do due diligence properly beforehand. So it's just, there's a lot of risk with operators that are newer not doing proper due diligence. One thing I'll say is, when I started, I got the due diligence handbook from that boot camp, and there's like 50 line items to address. We've learned and added to that due diligence checklist, and now we have over 350 checklist items on our due diligence list that we'll check on every property before we purchase it, because we've learned, X, Y, and Z, and we've made mistakes. So Property management risk number three, it's not complex, right? There's vacant lots. You want to put homes on them. You want to sell them to the tenants and then have them pay lot rent. But you really need to be hands on, and I think this is probably one of the biggest risks, in my opinion, because I've seen a handful of mobile home park deals that went bad, and it was 100% because it was bought and believed to be a passive investment, and they bought it and they just thought rents were just going to come in automatically. They literally just were hands off owners, and it couldn't be it couldn't be more of an active business that you're buying. It's not a passive investment. So I just would completely make sure you're aware of that. It needs a constant grip, otherwise it can get messy quickly. Natural disasters, bad weather, tornadoes, right? These are there is high risk tornado areas and things like that. But you can get loss of business income insurance, and this is something we do on all of our properties. Where if something like this does happen, that we have an income stream coming in that can still allow us to pay our liabilities. So this is something that you'll see in the paper and things like that when they do get hit. And a lot of times if the tenants own their homes, a lot of times FEMA will come in and say, okay, here's I know I've heard some stories about during the bad Hurricane Katrina in New Orleans. FEMA came in and for everybody that lost their home that didn't have insurance, they were giving them $35,000 to go buy a new home because it is just the fastest way to replace destroyed housing in a market. And there's some obvious benefits to keeping that affordable housing. Private utility systems, wastewater treatment plants can literally cost $1 million to replace. And if you don't know that in the due diligence process and you get into something, that can, make a deal go bad really fast. Well water, you have contamination risk, right? You're now a public water source for your community. And, you need to, make sure it's just extra management, extra oversight. So there's additional risks with those. We actually try to stay away from private utility mobile home parks because of some of these additional risks and expenses that come with them. Park owned homes, that hidden turnover costs. A lot of people don't realize that mobile homes are built with different size drywall, different size doors, different size windows, and you have to special order these from a manufactured housing, supplier, and you can't just go to Home Depot, to get these fixed properly. So it can be expensive. Some people's business model is to own all of the homes and rent them out and basically have a flat apartment complex with a bunch of rented mobile homes. And, I think, if you have scale in a certain market and you have a big maintenance team that can take care of this, it could be profitable. But our model is built more for scale and, having the tenants own their homes and giving them that ability to build equity in those homes that then they can sell and they can, for affordable housing residents, this is a big deal. That a lot of these residents never thought that they'd be able to own anything. So when they get that opportunity, it really is valuable and it helps them build that equity. The age of the homes is a big one. There was pre-HUD homes, like pre-1976 or 1978. They weren't built. There wasn't a consistent code from housing and urban development that they needed to be built towards. So they were just not as nice quality. They were smaller, but newer homes, you're able to move and relocate those, and they have certain building standards. So if you're buying a park that's all older homes, you want to make sure that you're aware of that because you're going to have way higher, maintenance costs. It's going to be harder to rent those homes because they were smaller, and there could be financing and insurance hurdles in the line down the line for you if you're trying to do anything with that property. Yeah, so there's a huge stigma, right, around mobile home communities, and there's a couple reasons of how this is a risk and how this could affect you. Is it's harder to find contractors, right? You can't go hire a general contractor to come work on a mobile home because they have bigger and better projects that they prioritize over this, and that stigma of working on a mobile home, kind of detracts some of the best contractors out there, or they'll just overbid it, because of that. So you got to find the more handyman type of carpenter that is willing to work on these renovation jobs. Sometimes it's harder to find lenders, because of the stigma and when we call around a location when we're looking to buy a mobile home community, there's certain lenders, even though mobile home parks, I think I saw it said somewhere it's like the second lowest default rate out of all commercial loans, and self storage was number one, and mobile home parks was number two. It has a low default rate, but some lenders just don't like the collateral because it's weird. Because if the tenants own their homes, their collateral is only their real estate. So if those tenants decide to move all their homes out, well, the bank's stuck with just that blank piece of land with utility infrastructure. And, they are worried about that. But, they don't realize, if they haven't done the research, that the retention rate and the cost to move those homes out is cost prohibitive. So it's interesting, where I have to educate and convince, lenders at times because of that. And typically it's the smaller credit union types and not, the bigger lenders that, we'll do our refinance loans with. And it can be harder to find investors at times, when you're looking to raise money for a deal. I'll never forget my very first investor that I ever approached about investing with me was a family friend. He actually was my basketball coach when I was little. And, I went out to lunch with him and I was showing him the pro forma on my very first deal. And he said, "Andrew, I love you like my own son, but there's no way that I'm investing in a trailer park with you." And, that deal ended up being really successful and getting great returns, but it was just the stigma of investing in a trailer park that, he wasn't even going to explore it. He wasn't even open to it. So, interesting. And when we don't invest into mobile home parks, we're not investing into affordable housing. And when we don't invest into it, then it will get, not taken care of, and, a higher and better, it'll get shut down because a higher and better land use will be allocated to that property. Government regulation is a big one here because, again, this is affordable housing. So rent control is a thing in several states, up in the Pacific Northwest, in New York, California, there's rent control, and that can, make this investment, and most of these are blue states, but it can make this investment where you're not able to get a good return if you're only, like in New York, you're only able to raise rents like 3% per year. Well, if inflation is 5 or 6%, you have a negative return overall on that. So just, again, due diligence can help you overcome some of this stuff if you know ahead of time instead of after you've closed on the deal. I've also seen, in one of our communities where the local government, building official was just having excessive demands and requirements to pull out a mobile home and put a new one there. And he was making it hard on us because he didn't like this mobile home community where it was located. He thought we should scrap the whole thing and sell it to a single family home developer. And he made our life that much harder, and our costs to to replace homes that were perfectly fine. He just wanted them gone because of the stigma. So that can be a sticking point. And knowing ahead of time, meeting with the building department before you buy something to see what their temperament is on the asset class, and if they are, an advocate for affordable housing or they're not, can give you inclinations of what those expenses are going to look like. This is common as well, right? They'll put age restrictions on the homes we can bring in. Vacant lots are not allowed to be filled again. Once they go vacant and they're vacant for over 12 months, they won't let you ever use them again because it's not in the zoning plan. They have, they want to change the zoning. Instead of a mobile home community, they want to make it a commercial retail development or something like that. So they'll purposefully, try to put you out of business. And there's some other, requirements that they've put in here as well. We talked about this throughout. Due diligence is so important, and starting with a checklist and understanding what you're getting into. And then also just experienced operators that have been through the gamut and have made mistakes and have learned from them, I think is the biggest way that you can mitigate some of these risks. I also put in here before we kind of dive into this, on some additional cons that I had is, you know, uh, it's a business, right? Like at the end of the day, we have to evict some of these tenants upon non-payment, and that is our last resort because no one wins in an eviction. Our attorney costs, outweigh sometimes the cost of the actual home. So we try every option to do cash for keys and to work with the tenants. And what we found is usually the tenants that we have to evict are just bad eggs, and they're, there's they won't communicate with us, and they just have this kind of inclination to try to take advantage. So, but most of the time, if someone's having a hardship and they just had a car repair and they're not able to pay their rent that month, and they communicate with us, we will work with them. We'll do a payment plan and we'll get them back on track because no one wins in an eviction. And I think that's a big common misconception that we're just trying to take advantage of the poor, and it couldn't be furthest from the truth. Due diligence. This is just a real quick way to kind of analyze an investment. There's a FEMA flood map. You can Google it and type in the address. Bestplaces.net and City Data both will give you good demographic information on like the median home price in the area. Because if it's under 100,000, the median home price, it may be an area where people can afford housing, and there won't be as much demand for living in mobile homes. Spot crime is good for identifying, high crime rate areas. Rentometer for rent comps. Schools is a big draw. We have one community in Ohio that it's in a really great school district, and people will leave, living in other parts of the state to come and live in this school district and live in the mobile home community because of that. So these are really big items. We check ahead of time. Park-owned homes versus tenant-owned homes. A large number of park-owned homes means that there's additional risk there, right? Because your expenses are going to be higher. Flat or pitched roof homes, flat roof homes, or like rounded roof homes are older, usually 1970s or pre-1970 homes. Pitched roof homes are newer and typically have a longer life expectancy. We talked about utilities a bit. The project, is it a big value add infill project, or is it stabilized? Is it 90% occupancy or above? All of these things are things that you want to look at before investing into a mobile home park project. All right. Return on investment. A lot of people that I speak with and a lot of people that listen to my podcast are, they've invested in apartment syndications. There's, they invested in apartment syndications, and they've heard, they're not getting the yields that they, were promised or that they expected. And they've heard about the yields of a mobile home park investment. And that's why they start listening to the podcast and trying to get educated. I spoke briefly on this earlier about the value of a dollar, right? In a 6 cap mobile home park, 6 capitalization rate, the purchase price on $250,000 in net income would be, just over 4.1 million. Now, if we buy this asset and we're able to find an additional dollar of income per month by, you name it, renting out sheds or, adding RV or boat parking to a vacant lot area, that $1 of income generates $200 in asset value. So there's tremendous value in, finding additional ways to generate income off of these assets. And here's a few case studies of how we've done this in real life. We infilled 26 homes. The cost of this was around $15,000 per home. And, without even counting the income that we generated from selling those homes and just counting the lot rent, that we will generate from those homes, then, being on our lots and generating monthly lot rent, we're generating $71,000. You do that at a 6 cap, we've added almost $1.2 million to the asset value just by infilling those 26 homes. And we probably spent $15,000 to bring them in and get them set up. And then we'll bring in, when we sell those homes, around $15,000. We may need to do that in, monthly payments with the tenant, so it's like kind of dollar for dollar on that $15,000. But then we've generated, nearly 1.2 million in terms of asset value because of that additional lot rent income. It's a little bit of, a couple photos, kind of what this looks like, right? I'm sure you've all seen them driving down the highway. These huge manufactured homes coming in on these big rig trucks. There's axles, wheels, all of that is really, really valuable stuff to just increase the number of affordable housing units in a market. Here's that project that I told you about, case study. We have a bunch of case studies. I think we have like 20 or so on our website if you want to check these out. But this is real life, right? We had an equity investment of 600,000. That was for the down payment and improvements. We went to work, and we're able to refinance this in a couple years and pull out, a considerable amount in just around 20 months. So it's realistic that this can happen when you're looking at, mobile home communities that, have vacancy that just needs to be filled. Now, it's not all just occupancy changes. This is all we did is we bought this community and we build back for water and sewer and trash. So the utilities were around, $46,000 a year in 2021. We bought the property, the income stayed the same, and we just build back. We put on sub meters on each of the homes and build back for their usage. Now, what was interesting about this is the total usage of the utilities dropped by around 30%. So people were being more green. They were conserving more water now that they had to pay for it. And, we were able to cut our expenses, from 41% down to 30% and, make this a 9 cap, right away, like year one, just by doing that one move that took us maybe 3 months to do. So this is where we're buying deals that, going in, it was a subpar deal, right? An okay deal at 7.6% cap rate. But then we were able to get it to a 9 cap just by doing one move. And it took us maybe 3 months to do that. So in terms of the value we created to the asset, that's a considerable amount of money where it probably cost us $500 per home to do this improvement. And these are some photos of the sub meters that go under the homes, from the water main to the homes, so we can track their usage. And we own a lot of parks in northern states where it gets really cold. So the winterization of those is another thing, right? You got to stay on the management. And every fall, we go under every single home, whether it's tenant-owned homes or a park-owned home. And we, properly insulate these to make sure that water leaks are not an issue, come the middle of January when we hit a blizzard. This is a community in Ohio. We had 22 vacant homes when we bought the property. They all needed literally $5,000 or $6,000 worth of work. We put in that money and it generated $1 million. We were able to get those vacant homes renovated and then sell them to end buyers, for around $5,000 or $6,000 a piece. That's what we spent to renovate them. And then we were able to sell them for that and get those occupied lots. It generated an additional $60,000 in lot rent, and at a 6 cap, that's over $1 million in asset value added just by renovating and getting those 22 vacant homes occupied. Here's some photos of these. That's a project I did back in 2018 and actually moved into a house in front of the community to manage all those renovation projects for a few months. And as you can see, it was worth it, right? Over 130% annualized ROI within 23 months. So again, we bought it with a local bank. We came in, we renovated the vacant homes, did some other common area, maintenance improvements, put some new signage, some new fencing, and we did some road work, and then took it to an agency lender and said, hey, now that we've qualified, we've done what you require. The property's better maintained, we're ready to refinance. So then we were able to refinance and get a higher loan amount. And we still own this asset to this day. So it's not like we had to sell to hit these return metrics. Yeah, how to get started yourself? I would say just educate. Be a sponge. There's a lot of books on mobile home park investing. There's a good one, Trailer Cash by Jamie Smith. That's one of the first ones I read. There's some really good podcasts in the space. Kevin Bupp has a great one called Mobile Home Park Investing. Jefferson Lilly has a good one on mobile home park investors. Frank Rolfe has Mobile Home Park Mastery. So some good podcasts that are easy, 30-minute episodes to listen to. forums, webinars, ebooks, blogs, just try. That's what I did when I decided I wanted to go into this business. I just went full hands-on, and I was flipping houses around Central Florida. And then I decided to pivot. I actually got into individual mobile home trailers, and I was investing in those and flipping them and selling them on contract. And then I learned that I could like syndicate and bring a pool of investors together to raise the money for the down payment and improvements. And then I could get a piece of the equity by putting the deal together. So I just went all in on this, and I was just a sponge and just tried to learn as much as I possibly could. And it changed my life. It allowed me to really get out of the rat race. This is a great Facebook group, Mobile Home Parks in Real Life. Mobile Home Park Mastermind group has around 6,000 members, and there's active operators in there that are asking questions, and you can really get a ton of good, valuable information from that group. Here's a LinkedIn group, Mobile Home Park Investors. This is Jefferson Lilly's group. He's one of my mentors. And these are great ways for you to just learn more about the asset class and network with other operators. MHU, this is the boot camp. They do the boot camp, the Frank and Dave boot camp, the top educational source for mobile home park investing. They have a good forum online that has a bunch of Q&A that you can research and get answers from other active operators. I go in there, and Bigger Pockets has a forum as well. And usually once a week, I'll answer a few questions. So it's a really good asset that a lot of people are active on. This is my podcast. If you get bored, I think I think my mom is probably my top listener to this podcast. But if you get bored, you want to research some more and learn about passive investing in mobile home parks, this is a great way for you to do so. I've interviewed a ton of other operators that do this and that syndicate mobile home park deals, and it's a great way to just learn. I ask them, hey, if you were going to passively invest in a mobile home park, what would you look at? What are the top risks that you would consider? And I think it's a great way to just get educated. Ebooks. I just put together an ebook. It took me a couple months to write this, but top 20 things that I've learned from investing in mobile home parks. You can get that for free. This is the link right here if you want to go to that. And yeah, it'll give you, I think it's like 20 or 30 pages of just top insights that I've had from my time investing in mobile home parks the last 8 or so years. Here's some important questions, like a lot of our investors, they don't want to deal with the tenants, trash, or toilets, right? The 3 T's of landlord life. So do you want to invest actively or passively? Obviously actively, you can get some great returns that way. But it's going to require that hands-on, involvement. Passively, you can generate some pretty decent returns without having to own a single-family home, right? And be that landlord. You can be completely passive. Do you have the time to commit to due diligence, right? That's a big part of this, is making sure that you're educated and you're checking things before purchase. And then this is another one, number 3. You really, is a con for some people is, hey, do you have the stomach to evict low income tenants when you need to? Excuse me, I had to cough real quick. And again, evicting is the last case. It's something that we try to avoid at all costs because it's a loss for us and it's a loss for the tenant. So we actually don't evict that many tenants, but it's a business and you have to operate it as such. Otherwise, we've bought in many mobile home parks from mom and pop owners that were friends with all the tenants and had huge collections problems because they were, not being consistent. They were giving a deal to this tenant and then, not to this tenant. And, they knew this person. And so they gave them a little side deal, but they didn't offer that to the other tenants. And, that's just not how you run this. You got to run it as a professional operation, a professional management company would. And, that's a big part of this. And then also, as with most commercial real estate, it's illiquid. It's not instant, sell the stock, and get access to your funds in a day or two. It's a piece of real estate. So you got to be comfortable with that before investing. Return estimates. Now, this obviously varies based on the operator, the deal structure, the type of project, but here's some just ballpark ideas. Again, this is complete estimates based on, things way out of my control, but what I've seen is these types of returns on these types of assets, right? Stabilized value add and developments. And developments are pretty rare because it's so hard to get the zoning approved. There's more mobile home parks torn down every year or redeveloped into another form of real estate than there are new ones built, by a factor of like 10 to 1, because it's very hard to get those developments built, except in certain states like Texas, for example, which I know a lot of you are from that area. Out in the county, it's much easier, but in most states, it's very hard. 4 ways to find sponsors to invest with, right? That Facebook group I mentioned, LinkedIn group, the forums. You can get in there and see who's active and who's answering questions and seems like they know what they're talking about. Podcast guests that I've had on my podcast or others. And, you just want to be with someone that has been there before, and you're not, you're not their education, right? You want to invest with someone that's done deals and has a proven track record, and you're not gonna, they're not gonna use your money to get educated on how to invest in mobile home parks. You're gonna invest with someone that already has systems and a track record that they can prove. But ways to vet a sponsor: obviously verify their track record, if possible. Speak with investor references, ask about the mistakes they've made. I think one of the biggest ways, number 4 here, drive through one of the mobile home parks that they own, or pay someone on Craigslist to do it for $50 and send you a drive-through video and see what type of condition it's in. Is it trashed? Is there, tenants with, laundry machines in their front yard and old fridges, in their front yard, and tires all over the place? Or review a quarterly report, to see what the financials and see what the project looks like. So recapping, we went over the benefits. We went over some of the risks of investing in mobile home parks, how to add value to a mobile home park and what that looks like on paper, how to get started in mobile home park investing. We touched on that. If you're interested in learning more, here's that ebook that I told you about, the top 20 things that I've learned. You can go to this little bit.ly link here, and it talks about due diligence mistakes that I've made, and also has tips on increasing occupancy. So this is a brief ebook, but it does cover a lot because it's the top things. So feel free to check that out. All right. Well, I really appreciate everyone attending. Here's my contact information if you'd like, to connect, or talk about investing, or if you just have a question on mobile home park investing. I'm a fan of the asset class. I believe in it. I think it's doing good because it's adding affordable housing, and it at the same time is an area where currently we're able to generate some pretty attractive returns. So it just creates that win-win. So would love to connect with anyone that's interested. But I think now we can go into some Q&A, and answer some questions that you have.
Yes, absolutely. Thank you so much, Andrew. And there are some that have come through already. Before we get into that, I just want to spend a minute, and kind of tie everything back into where Quest falls into this. Where do what are our services providing, right? So for those of you that have really not heard of us, y'all may not be too familiar with what a self-directed IRA is. That's what we do. We're a financial institution very similar to the Fidelities and Charles Schwab's of the world, right? The difference lies in the asset selection. So we enable individuals to invest into these real estate, private alternative deals, right? Anything of that nature. So mobile home parks is something that we see frequently, and mobile home park syndications. So if you are interested in learning about how to, access your retirement money, your 401k, other IRA funds, and utilize that in a self-directed IRA to invest in mobile home parks, please let us know. You can scan that QR code to schedule a consultation with an IRA specialist, somebody such as myself or one of the other specialists on our team. and we'd be happy to answer any questions you have, discuss what the best fit is and how you can do something like this. So as far as some of the other services that we do offer, our Gold Family team is a small group that works at Quest. They handle very specific individuals or clients of ours that do, I guess, get a little bit more, expedited services and personal touch, right? We offer special events to our Gold Family clients. So there's a lot of different things that our Gold Family team offers. And I would certainly look into that if you are maybe even a current client who has a lot of active investments and transactions and maybe accounts for you and your spouse and your kids, right? That's I would say a really common circumstance in which somebody would be interested in the Gold Family service. Additionally, if you are looking to maybe get started in your own alternative investments, you really like what Andrew said, right? You want to move forward with something like this, let us know. We actually are opening up. Typically, we charge $100 to set up a self-directed IRA. We are waiving that until the end of the year, so kind of as a little Christmas gift from us to you. So if this is something you're interested in, I highly, highly encourage you to kind of jump on the bandwagon now, while there are some nice offers out there, and you kind of have it's fresh in your mind. You are looking to maybe get more education or start your investments, whatever that may be. Please let us know. The last thing here is a huge. So Andrew talked about some of the forums and different things that are specifically in the mobile home park space, but the Quest Expo is all things alternative investment related. So due diligence, real estate investing, single family, multifamily homes, oil and gas, mineral right projects. We'll probably talk a little bit, cryptocurrency is another alternative asset class, private equity, promissory notes, private lending, things of that nature. So that's all what we are kind of experienced with, right? And that's the kind of things that will be talked about at the expo. So it's going to be a 3-day event, June 27th through the 29th. Most of the education and things will be held on that Friday and Saturday. But I would highly encourage y'all to check it out. You can go on our website, or actually just go to questexpo.com. And we've shared a link here that you can actually purchase tickets now. Until the end of the year, we've got early bird pricing. Typically, general admission tickets are $450. So for right now, they're $350. It'll change in the new year. They'll increase by $100. We also offer VIP tickets, which adds a ton of value to the event, to be quite honest, for $850. You can see ticket prices and more details about speakers and panels, and we'll kind of be releasing more information as we get closer to the event about what the schedule will look like, what the topics are, right, and all of that sort of thing. So without further ado, though, I do want to jump into some questions that we have. Let's see here. So Andrew, a couple questions here from Francis. You mentioned closing on 3 assets before the end of the year. Which markets are those, and what are you focused on?
Yeah, great question, Francis. So we are focusing on like secondary and tertiary markets in the Midwest primarily. Now we're targeting those markets because they're high cash flow markets. We're able to find better deals from the mom and pops. All of our deals are bought off market. So we have a sales team that cold calls and finds these deals and then takes them to the contract phase. So the deals we have currently, one is in Detroit, Michigan MSA. One is in Norfolk, Virginia, which is outside of that area, but that's a market that we've been marketing to. And then the other one is in the Cedar Rapids, Iowa MSA.
Fantastic. Another question from Francis. Are there specific property management companies that do focus on mobile home parks?
There are a couple of them. And like there's one called M. Shapiro. They're probably the biggest. There's another one that's like the Blank Family Communities. So there are a couple, but I think they're like nationwide property management companies. But I think you just have to, as with any property management company, it's expensive. You're you're not going to, they're not going to treat it like they own it, right? And we bought a portfolio of 3 properties from a property management company that was managing it, for another owner. We bought 3 properties from them, and their expense ratio was around 56%. And then we bought those assets, and now they're down to around 32%. So, I think, there are mobile home community property management companies, but just don't expect them to be, managed at an optimal, rate and optimized NOI.
Awesome. We've got probably time for just a few more questions, but regarding this question from Kamea about tiny homes and tiny home communities, what would you consider this to be a direct competitor? I mean, how do these kind of compare to mobile homes and sort of your side of the space?
Yeah, great question, Camilla. Yeah, tiny home communities are pretty neat, but they're pretty niche, right? Like it's only in like the Austin, Texas, or the Portland, Oregon areas that I've seen them really be successful, where you're getting those single professionals. But the other thing that a lot of people don't really realize is those tiny homes are expensive. They're more expensive than some of the manufactured homes. Like the one behind me typically costs around $36,000 from the manufacturer that we're buying it from. But your average tiny home is upwards of $90,000. They're very well done with like, it's just a different asset. It's less. I think it is still affordable, but it's, we're catering all age communities that typically are, husband and wife and have a couple of kids in 1,000 square feet, where a tiny home is obviously much smaller than that. So I think it's a niche asset class that it's going to serve the certain type of person that wants to live in a tiny home. So I don't think it's directly a competitor, because most of our people want more space. Like if you look at the mobile homes back in the 1950s and 60s, they were like 12-foot wide, 40-foot long. But now in today's day and age, they're 16-foot wide, 80-foot long. People want those bigger homes to live in.
Yeah, very market specific. Okay. Another question here. What are the best opportunities available now to investors as a result of the undersupply problem, and where can new parks be established?
Yeah, new parks. I think Texas is a great, in the Texas Triangle. There's some development projects underway that I think are interesting. I think as long as the market lot rents in an area are over $550 a month, which in Texas there are some. I know a friend of mine that's developing a project in Bozeman, Montana. That's a huge 300 lot mobile home park, and the homes in that community are selling for $250,000, the manufactured homes. So I think just buying in a high growth market and making sure that the market lot rents, for the similar quality assets that are being built are above 550. It makes sense all day to develop new, if you can get them approved through zoning. But like, we think that in our investment strategy is, hey, there's lower hanging fruit versus developing from scratch, where it's a multi-year process, and just to get entitlements is very expensive. So we want to go after projects that are mom and pop owned. It's maybe 100 lots, but only 70 are occupied. It's cash flowing from day one, unlike a development. And then we're just going to infill 30 homes to fill up the vacancy, maybe sub-meter water, sewer, and look to refinance by the end of year 2.
Mm-hmm. Fantastic. Okay, so one last question that I do want to ask. I think like to hear you speak a little bit more to maybe how people can vet these mobile home park operators as GPs, as general partners, especially in terms of the reliability of the operator.
Yeah, I think the best way, is going to be to verify their track record and to look at the projects that they've done in the past, try to visit them if possible, or get boots on the ground to, get a drive-through video so you can see, how the day-to-day looks in their mobile home communities and what that looks like. Obviously talking to existing investors and getting, feedback on their performance, but also their communication. I've invested passively with other mobile home park operators that are, more new up and comers, and, I don't hear from them. I just don't have the systems, right? Because it's just the single operator he's opening the mail, he's writing the checks to pay the bills, he's talking to the tenants to collect rents. And, he just doesn't prioritize communicating to, myself as a passive investor. And that kind of bothers me because I want to know, hey, is this profitable? Where are we at in terms of the financials? So communication is important. And I think just verifying track record is important as well. And trying to just get eyes on what their communities that they manage now look like, because that's going to be your tide tell way of seeing if they're doing a good job or not.
Yeah, fantastic. So the last thing I want to do here, I want to throw your contact information back up on the screen. But while I'm doing that, would you? I'm sure everybody would love to hear, how you, I guess, specifically help real estate investors. What's the best way for them to reach out to you to find out about your deals and things like that?
Yeah, no, I'd appreciate it. My website is keelteam.com, and that would be the best way to get in touch with us. Even if you're just open to just hearing more about mobile home park investing and you have questions, whether you want to be active or passive, we'd be happy to chat with you about that. We've partnered with people that have brought us deals before, wholesalers that find an off-market deal, they bring it to us, and then we partner together on that.
Oh,
And
okay.
then we also have, we do syndications where we'll fragment ownership, and investors will get a piece of the pie and piece of the equity in the deal. So yeah, keelteam.com. You can check out our contact form and reach out to us there.
Fantastic. Well, I think, I mean, this was just jam packed with a ton of great information. I'm sure that everybody really appreciated it, and I know that we certainly do. We really appreciate the time that you took out of your Saturday to come on and kind of talk a little bit more about your area of expertise. So, thank you so much, Andrew. I will and for everybody else, we'll have the recording posted on our YouTube channel. I mean, probably within a few minutes, to be quite honest. So, for those of you that maybe missed something or you wanted to hear a little something again, right? Just go back on there. It'll be posted on our YouTube channel. But thank you so much, Andrew. Like I said, we
Yeah.
really appreciate your time.
Thank you, Colin, for having me. And thank you to Quest Trust.
Absolutely. And we hope everybody has a great weekend. Enjoy the holiday season. And we'll see you next time.